Hello everyone, welcome to Applied Finance Simplified. In this video, we will learn how to read a debt mutual fund fact sheet. Many times when we try to read the debt fact sheet, we get confused regarding the terms used in the fact sheet like the riskometer, the ratings profile of different securities, yield to maturity, the returns over different periods compared with the benchmarks, modified duration. Do you find it difficult to understand these terms? Don't worry, we will divide the debt fund fact sheet into different sections and talk about them in detail today.
A debt mutual fund fact sheet will generally have the following information: the investment objective of the fund and the fund details, the fund's portfolio, the fund's performance over different periods, style box. Further, the information regarding quantitative details like YTM, Macaulay duration, modified duration and average maturity is given. It will also have information like riskometer and the fund manager's details and experience. Let us talk about each of these parts in detail. The first being the investment objectives and funds details. Under this, the information is given regarding the scheme's objective. So for example, a credit risk fund will predominantly invest in AA and lower rated securities, whereas a gilt fund will predominantly invest in government securities. So the scheme's objective and the portfolio design in the scheme should match. Then the year of inception of the scheme would be given. Further, the information regarding the asset under management would be given. Also, the scheme's NAV under both the regular and the direct plan would be given. Then there will be the information regarding the exit load. Exit load is the fees charged by the mutual fund to the investor when he exits or redeems the units or switches to another scheme within a specified duration. Further, the information regarding expense ratio is also given under both the regular plan and the direct plan. Expense ratio is the fees charged for the operational expenses by the mutual fund house. Expense ratio for a direct plan is much lower as compared to that of a regular plan. So one should always invest in a direct plan to minimize the expense ratio, will generally lead to an increase in the returns of the debt fund. The next section gives the information regarding the fund's portfolio and the rating profile. The fund house will generally invest based on the scheme's objective into different instruments like the treasury bill, corporate bonds, government bonds, commercial papers, or many other instruments based on its investment objectives. Further, the space will also provide information about the percentage of the investment made as compared to the total NAV or the assets under management. And the rating profile of each of these instruments along with the entire rating profile of the fund will be provided to you. So one needs to look carefully at the ratings portfolio as well as the individual investment to see whether there is any lopsided or large exposure taken by the fund house to any particular kind of instrument which is lower rated to reduce the risk. So you'll observe that there is a great amount of transparency that is maintained by the fund house in giving you the information regarding all the securities that it has invested in. So it's important for you before making an investment to check all the securities and the individual ratings of that securities and to align your own risk profile with the risk involved under the scheme.
One needs to understand the different credit ratings. Credit rating is an analysis done by the external credit rating agency like CRISIL, CARE, ICRA, India Ratings, which analyzes the credit worthiness and credit quality of the issuer and the instruments. So typically the credit rating scale is divided into investment grade credit rating and non-investment or speculative grade credit ratings. So credit rating starts from AAA and goes down till D. AAA is the highest kind of security or safety rating, and D is default rating. So one needs to thoroughly understand these credit ratings and look at the credit ratings profile of the various instruments invested under the fund.
The next important section is the quantitative indicators. These provide valuable insights to the investor. The first ratio being the YTM or yield to maturity. Yield to maturity is the return generated from the cash flows of the bond if you remain invested till maturity. Please understand this is an indicative return of the mutual fund and it is not the actual return. The actual return will differ based on the churn rate of the portfolio and also the interest rate scenario in the economy. You can use YTM to compare similar kind of schemes offered by different fund houses before making an investment decision. The next ratio is the average maturity. The average maturity is the weighted average of the current maturities of debt securities involved in the fund. So this will be given in the number of years. Then the next ratio is called Macaulay duration. Macaulay duration is the weighted average term to maturity of the cash flows from a given bond. This Macaulay duration data will be given for each scheme. Please remember, higher the Macaulay duration of a fund, it means it is higher subject to interest rate risk. So you need to align your investment horizon with the Macaulay duration of the scheme. The next ratio is the modified duration. Modified duration indicates the price sensitivity of the fund to the changes in the interest rates. If the interest rate changes by 1 unit, it indicates by what percentage point the NAV of the fund would change. So let's take an example. Let's say a fund has a modified duration of 5 years. This means that if there is an increase in interest rate by 1%, then the fund's NAV will reduce by 5% and vice versa. So remember that the modified duration indicates the price sensitivity to the interest rate changes. Hence, if you want to lower the risk or exposure to the interest rates, you need to invest in fund with a lower modified duration. The next information will be regarding the fund's performance as compared to the benchmark. So the fund's performance over different periods like 1 year, 3 year, 5 year and since inception would be given to you, and this performance will be compared with different benchmarks. So the funds can use different benchmarks for different schemes, and the details about this will be provided to you in the fact sheet. This performance data can be used to compare similar categories of schemes offered by different fund houses. Please remember that this performance is a past indicator and it does not guarantee the future returns. So let us quickly go through an example. I have selected ICICI Prudential's credit risk fund for an example. This is no way a recommendation of investing. So let us quickly go through the fact sheet.
So let us go through the example of ICICI Pru Credit Risk Fund. It is an open-ended fund predominantly investing in AA and lower rated corporate bonds. The first information that you see is the style box. Style box is a pictorial depiction of the credit quality of the instruments as well as the duration of the scheme. So if you see, the credit quality is high to medium and the duration is short duration. Further, the performance indicators are given here. So the scheme's performance is benchmarked with 2 benchmarks selected here. One is the CRISIL Short-Term Credit Risk Index and second is CRISIL 10-Year Gilt Index, and the performance over different periods is given. The next section talks about the fund manager's experience. Please remember, fund manager is a very important person because he, along with his team, takes the decision regarding what instruments the fund needs to be invested in. His experience along with his time from when he's managing this fund has been given in the space. Further, you have various information regarding the fund details given under here, like the assets under management, like the NAV of the scheme, the exit load, the expense ratio. The quantitative indicators are also mentioned as we discussed in the video. Here is the script by scripts portfolio of the scheme, the credit ratings of each of the investments made, and the percentage of each of the script to the NAV is given in great detail. Further, you will also find a pictorial depiction of the ratings profile of the scheme. Please remember, you need to go through the debt mutual fund fact sheet thoroughly before taking an investment decision. Always consider your risk capacity and then invest in any mutual funds.
So friends, I hope now you would have understood how to read a debt mutual fund fact sheet. If you like the video, do hit the like button and subscribe to our channel for many such informative videos. Thank you for watching.